How to Trade Forex Lecture 6, and in this lecture we're going to visit the subject of indicators. We've already looked briefly at one called the Bollinger Band, but we're going to take a more in-depth look at the simple moving average and how that's used. We'll also revisit the Bollinger Band to make sure that you know how to install it properly on your trading platform. Indicators are lines, but they're only lines or symbols drawn on a chart to assist in the decision-making process in respect of opening or closing trades to our maximum advantage. And the thing about indicators is that we rarely, if ever, use them in isolation. So normally we want to use a couple of different indicators and get a confirmation from them that they're all pointing in the same direction in terms of whether we should be buying or selling and whether we should be entering or leaving a trade at a particular time, any given moment. There are many different indicators available, and throughout this course we will look at some more. And different traders use different indicators and have a varying degree of confidence in them. You will find that a lot of traders develop their own little favourites and generally stick to them. The danger with that is that if the indicator stops working as well as it has been, and quite often that can happen, then we tend to stick with them too long. So we've always got to be careful to keep the indicators that we're using under review and be ready to change them if it's appropriate to do so. Even with the proprietary indicators that we're going to look at in this course, I actually go in and check their performance every single day, and on that basis make a judgment as to whether they're still working or not. Probably the most basic, widely used indicators is the simple moving average. So, indicators, and the indicator I want to start with is the most simple indicator of all. It's simply a moving average. And that moving average is shown on this diagram as a red chart line going across from left to right. And it's being shown on the, it's called cable, but that's just another name for the Great British Pound US Dollar chart, and we're in a daily chart here. So if we were to move to an hourly or a minute chart, the average would change, of course, because it would be calculating using different figures, but the principle would be the same. The question is, how many of the candlesticks does the moving average use in its calculation? And we can vary that, so we can decide how many to actually put in there. Common numbers are 10, so periods of either 10 candlesticks, or that could be 10 hours, 10 days, 10 months, 10 minutes, or a 20 period moving average, and that would just use again the same 10 hours, 10 minutes, 20 hours, 20 minutes, or whatever it might be. And we can see even from this simple chart that a moving average is an excellent indicator, especially for training the eye on where things are going. It just takes a line through what's going on. The fact that the moving average here is much higher on the left hand side is telling us that prior to the period we can see in this window, there must have been some fairly high prices. And what we're really interested in is the direction of travel, the slope, if you like, of that red line in this case, which is the moving average. And we can see for a period it was coming down laterally, and then it was moving sort of up again, and at present it's turned again down. So many people would take that as being a reasonable indicator that they should be looking at a situation where the average is moving down for the moment. Not necessarily by a huge amount, but going down. So unless and until that average has moved down, you probably wouldn't want to look at a buy trade because it's going down, and it would immediately put your buy into a losing position of one. I'm now going to show you a piece of video that actually takes you into greater depth on what this is and what it does and how to get it on your screen. Hello, and in this video we're going to look at moving averages. So here we've got a basic, nice clean trading screen with just the candlestick showing, and we're currently in the 15-minute time scale view. So to add a moving average, we would simply go to the top toolbar and to insert, and we get indicators. First selection down, and down again as far as trends, and we'll see in here moving average. Left click on that and we get this window opening up. Here we can choose the period of the moving average. One of the most commonly used ones is the 10-day. So I'll change the default 14 that's appeared and put in 10. I can change the colour to whatever I want, and I can also change the type of line it is or the thickness of the line. I won't bother with those two at the moment. And we can then change the visualization, and this one I'm going to leave it so that it's visible in all of the different timescales. We press OK, there it is, and we can see that the 10 period moving average line has now appeared, and it's simply an average of the candlesticks in there, but we can see that there is a trend there too. So because I chose to have this visible on all of the different timescales, we can have a quick look through. So we're currently looking at 15-minute periods, so that's quite a time scale. But if we go down to 1 minute, we can see it's still a downward trend. 5 minutes, it's very similar. 15, more sharp in the decline. 30 minutes, getting a pattern going here. We're now up to 4 hours and a day, a definite downtrend in progress, and on the weekly we can see that it looks very different. So we've now got a long-term trend upwards which has actually changed in direction. So that is a very significant change, and if we look at it on the monthly scale, we can see again in actual fact that we're probably still in an uptrend, although there has been a little bit of a kick down. While we're on this chart, I might as well have a look back. We're looking at September 2007 here, and that price is well over 2.1860 up there. And we've also had in January 2009 a figure as low as below 1.369. So you get quite a variation over time in these prices. Let's go back down to the 15-minute chart. So I'm now going to put a second moving average line in place. Same procedure again, so insert, indicators, trend, moving average. This time I'm going to give it a value of 20, so we're always going to be looking at an average at any one point on the chart of the previous 20 periods as a moving average. And it's simple, and the colour wants to be something different. So let's make that blue, and then it'll stand out. And there we have it. And if we look at different time scales, we'll see that quite often we get the two different periods of simple moving average crossing over. And a lot of people say that once they cross over, that is an indication, hence we're looking at indicators of a change in direction. So we were going straight across. There's a couple of changes and I ignore those for the moment. A major switch over and a major change. Then we had another change and some downward movement. We had another change and again some downward movement. So it can be quite effective, but it's not the sharpest tool in our particular toolbox. Now I'm going to remove that second line just simply by putting my mouse over it and right hand clicking, and with that we can delete the indicator. The reason that I've done that is because I'm going to put back in place the indicator we've had previously, which is the Bollinger Band. So again, indicators, trend, Bollinger Bands, and the period is 20, the colour is blue, and if we click to put that in position, we'll see that we've now got the Bollinger Bands in place. But the Bollinger Band is actually a statistical calculation around a moving average, and the default one is the 20 period moving average. So in other words, the central blue line of that Bollinger line display is a 20 period moving average. In actual fact, the distance away from that moving average is a statistical measure of standard deviations. So that's how we put in place simple moving averages, how we see the simple moving average for the 20 period on the Bollinger Band, and also how we remove unwanted indicators from our trading screen. There are lots and lots of indicators, and most of them are standard. You'll find them on any and every trading platform. You can actually get them made to your own specifications, and also you can get some that are for sale. If we look in the Market tab to the bottom of your screen here, you shall see that in fact you can also buy them. So some are within the system as standard, and others come as additions, and lots of them are termed as applications here, which is what in effect they are. The only standard indicator that we will use in this training is the Bollinger Band. We're going to use some custom indicators which have been designed, tested and put together by Forex Trader magazine and its staff. But more on those later. You can also see indicators listed on the left hand side of your screen. There's a little plus sign there, and if you click on it you'll get again lots and lots of examples, including just about everything you can possibly think of, and some of those even open up into additional ones. Another way to actually put these on your screen rather than going through the insert procedure is simply to left hand click on one. I've got Bollinger Bands here, left hand click, drag it onto the screen area, make sure that the boxes are as you wish and click OK. As simple as that.